Welcome to TradeTheNBI.com. This is John. This report is for the 15th of November. It's been a beautiful retrace coming back through here. We've come all the way back down to the 23% line. And supported off of that one briefly, though, we are still in a continuation mode via what we're seeing from the DOC readings at this point. A small breath of fresh air is the steel moving above the orange at this particular point. Between the cyan and the red DOC, that is continuation, which means mostly heading to lows and fighting back in between. We've been closing just above. We're slightly higher now from a full dip all the way down, and we haven't dipped below the red line from an extreme histogram standpoint, meaning that we've got still some buyers sucking this up even as it dips. We just don't have as many. Obviously we passed that support move from the beginning of the month where we saw this nice uptick, and then once that buying dried up, price faded pretty quickly because there's still uncertainty election-wise, policy-wise. Those things do add a little bit of concern, and it's normal action so far. I mean, when you look at it from this standpoint, we were looking at 50% retrace as a normal like ABC action, but we haven't seen enough of a dip of the orange or even a turnaround in red at this particular point. But if it does, you can see that it's going to make a higher pivot at slightly higher price, and that would be a net positive. NASDAQ looks almost identical. So they're very consistent at this particular point, which just lets you know the computers are really doing a good job of handling the action. The recovery from Euro decline on the worries of the Brit exit has faded as the central banks move back in to get things back up into the previous range. It's a clean buy from a higher pivot on lower lows. Those are always nice little add-in points. Of course, with the decline in the market from the other day, defensive buying into treasuries, no shock there, still way overvalued for what it should be trading at, but it's always relative. If you need safety, you need safety. It doesn't really matter. Little pop-up back in oil, even though we see that there's just plenty of build-up in supplies, and that is just that ability when price gets to a point that's significant, people ramp up production because of the capabilities now to do that short term, and that has caused a significant slide. Plus, you know that Iran is going to be cheating with the EU, blah, 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 from sanctions, so there's plenty of supply. This is not about constricted supply in any way, shape, or form. And that super dip of green always produces a nice little bounce. It's not likely to last on that one from gold. Whoa, and then we get into the 5K chart, and boy, was that busy. Let's just slide over to the beginning of the day action and move that into the middle here, and we'll expand the chart just a bit, make it a little easier to read, because we had a lot of good action, and it was fun to play with this one. So we had that little pre-market dip that came through, gave plenty of nice buys, and then we started getting up to the peak just before market open, and we started making, your equivalent double tops, and we did that though on lower shakeout. So I always like to draw my little line right here. It's like, oh, hey, if I take it off snap mode, that works better, because then I can angle it down so you can see it clearly going down, price clearly going higher. This is what we would call a typical divergence. So that one's going lower, that one's going up. So when I get a sell signal, and particularly when it was right at the ABM, even before the bar closed, this was already producing a DOC spread, and then it just seemed like it wasn't going to go anywhere. I thought maybe it was even going to move back to the highs again to form like a triple version on continuing declining, but nope. That's when it started to break down. And once it broke down to these lows, we ended up getting briefest of little buys, but it was below that negative 13.5, and usually those don't do very much, and sure enough produced a secondary sell that was just above where the algo. So I was expecting at least from that 33 to get back to this 27.29 algo, and then find out from there, and it just blew right past it, and then the waterworks opened up at that particular point, and we just kept cascading lower. And at that point, I was in at the 40 level and just literally trailing this from my 50%. Thought I was going to get stopped out on this one. It had a nice series of rising red DOC with the little springboards, but with gold below 50. And then we had the blue, which is the Azure rising, and still couldn't get to the 50. And then when that broke back down, it was just a matter of trailing it completely all the way through. And I went all the way until very late. I was a little slow in lowering my stops from this one, so I didn't get taken out on that one, but I ended up closing out as we ended up making this secondary dip right here, because it really was starting to show that we were consolidating, and we were starting to get a little bit more compressed movement. And I thought, well, that was a pretty awesome run, going 40 points down. I wasn't going to pass that up, and so it was a nice one. And it didn't produce all that much of a move, but it consolidated. And then right here, I colored this one green just to show a little bit of a difference, because basically this was a bullish snake on the, and you'd have to look at the numbers, but this is a rising red. So green was already over, but when it crossed over back over here, you had no orange at that particular point. But a couple bars later, at this point now, everything shifted, and then boom, it confirmed itself with the green over steel, and then the orange did completely go below red, and that led to the super extreme, which was another short. Didn't even mark the DOC spread, because these are the same configurations we look for. Now this one right here, where we peaked up, you get the green and then the steel breaking down. It was a pretty wide open mouth. I wasn't expecting that one to react as quickly. In fact, I waited until the secondary move right here, which is a clear short snake mouth that happened right there, even though you had the complete steel reset. I was expecting that even once that DOC spread, that once we get the steel right over here, it lowered the stop down to that 76% line. Because that's usually got to be careful of those when that steel crosses. But we were still having good declining shakeout, and we dipped below the red line, so wasn't overly concerned about it. And then boom, it cascaded even lower. And then we sort of got into this muck setup here that leads into where we're at right now. The day ended, and we got to get into a little bit of an uncertainty phase at this particular point. We were still below on the negative 13.5, so I didn't expect this one was going to do anything. It didn't do a whole lot. It was pretty much got in, it started to move. It said break even, because it wasn't really trusting where it was going to go with that kind of dip. Sometimes these can run, but that's why I like to be defensive with it, plain and simple. Same thing with the secondary one. Much higher red. You had even cyan dip below, and immediately came back down. But as you can see, even though it came down, made a lower low, it still moved all the way back up. Just cleared out stops, and this can happen in the post-after market. It's something you always have to watch for, but you had a continually rising shakeout, so it's just literally a good fake out. And those are going to happen. See, this is where that added volatility. If we go back to the daily and we look at that range, it's been trailing off. We're down to 51, but 51 points. You know, your standard, tight stops of a couple of points or whatever, they're not going to work when you have these kind of ranges. You have to be more open to it. But then again, you also have to capture bigger runs. So when volatility changes, you have to change with it. If you don't and stay static with what maybe you usually do as far as stops in it, it's not going to work for you, plain and simple. So you have to be dynamic to the market, because the market is dynamic. And it lets us know when ranges are increasing in that, and we can see it. So you have to adapt with it. And otherwise you're going to miss out on some significant moves, because capturing short for 40, 50 points, longs for another 15, 20, they start to add up to big days within some of these otherwise innocuous times, and it's a fantastic way to really accelerate returns. So I think it's exciting stuff. Hopefully you keep following it. I had a fun day on Bitcoin. I thought I would show that one. Boom. And then people always say to me, oh, well, what caused that? Well, I said, hey, did you bother to look at the daily? Did you see the beautiful DOC spread took place, right here at the close of 64? And then you drop down to the 52s and everyone's like, huh? Yeah, it's not that hard to see. It spells it out for us. It's just a matter of watching and waiting and then reacting. It's always what the market is. Are you there when it's ready to make its move, and can you see, how clean those signals are? Are you willing to just, do the basic stuff? I mean, in these particular cases, it's like, sure, it took a little bit of heat, but a couple of points within a broader range. It's like I knew where my stop was going to be up at the highs. And no, it does its thing. And more often than not, which means usually well over the 60+% range, you're going to be on the right side of it. And as long as you're willing to collect the solid returns by letting it move, you're going to be way ahead of the game. As always, though, I will put up relevant charts and show any of the different trades that I'm in. That way you can follow along and or just be up to date on how the market's trading. As always, trade well. We'll talk again later.